we're seeing a fair amount of still accumulation going on. And that usually leads to this up move here. And so I am expecting us at some point to push back up. I think on a technical analysis basis in the near term over the next couple weeks, you're kind of looking to go back and test this former low here, right? So right around this 80,000 level, maybe to these lows down around 85,000.
This episode is brought to you by iTrust Capital. iTrust Capital gives you a great alternative for buying, selling, and custodying your crypto assets. They allow you to set up a self-directed IRA, which gives you huge tax advantages. You can even roll over your 401k to this platform. And they not only offer crypto, they also offer gold and silver. And as mentioned, the custody gives you another very safe alternative. So many of you know about self-custody. That's a great option, but you can also use iTrust Capital's premium custody accounts, also known as PCA. So with the rise of crypto scams and phishing attacks, a lot of retail investors are losing their shirts. I mean, let's be honest, right? It sucks to hear that exchanges are getting hacked. Well, iTrust Capital does things a bit different here. They use Fortis Bank as their qualified custodian. So they're actually using a bank here, and they have partnerships with Coinbase, Prime, Fidelity, and Fireblocks. They are fully US based, and their client experience team offers direct phone support. So not many platforms offer this. This is very unique to iTrust Capital. And folks, most recently, we heard from President Trump that the United States is looking to unlock 401ks to be able to participate in crypto. Well, you can get ahead of the curve by using iTrust Capital and getting started in that process. And folks, I'm a user of the platform. I have an account with them. If you sign up with my link, which is itrustcapital.com/thinkingcrypto, you can get an exclusive $100 funding bonus. So go learn about this great, safe, and awesome way to buy, sell, and custody your crypto. A great alternative, once again, with tax advantages and a lot of safety, very safe compared to many exchanges. And all the links will be in the description. Check it out.
Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Gareth Soloway, who is the Chief Market Strategist at verifiedinvesting.com. Gareth, great to see you.
Hey, great to see you. Thanks for having me back, Tony.
Yeah, Gareth, it's been a while since we've done one of these, and I think it's good timing because, Gareth, there's a lot of fear out there and uncertainty, especially in crypto, and folks want to know, what may we see in the short term and even the long term. So I figured I got to get the expert on, so great to have you here.
Hey, thank you.
Let's start with Bitcoin, and maybe you can share your screen and the charts. What are you expecting in the short term?
Yeah, so it's interesting because, number one is we've really seen this very steep decline in two separate arenas, right? We had the all-time high where we fell down to this 81,000 low. Then we kind of consolidated, and this is a classic bearish formation, which then led us to this latest drop. Now, I will be the first to say that I don't think the nastiness is over just yet. But in the near term, I am expecting a relief rally. And so what we do have in the near term, and this is so again, we have to kind of keep our minds in multiple time frames. So if we look at the next week or two, I actually think there is a relief of upside in Bitcoin here. And so for instance, I did go long a little Bitcoin off of this reversal because what we're forming here is this beautiful little bullish consolidation pattern. And again, for technical training, educational purposes, when you get a strong green candle up, and then you get this kind of sideways consolidation. That's buyers and sellers that are meeting essentially at that price. And it's telling you that even though we made this good bounce, this bounce right here, we're seeing a fair amount of still accumulation going on. And that usually leads to this up move here. And so I am expecting us at some point to push back up. I think on a technical analysis basis in the near term over the next couple weeks, you're kind of looking to go back and test this former low here, right? So right around this 80,000 level, maybe to these lows down around 85,000. And so that's my near-term upside target. Now, the reason why that's going to be a lot of resistance is it was a lot of sideways chops. So there's all these buyers and sellers that were in here that are now out of the money. A lot of them will decide to take flat outs once we get back into that level. All right, now let's expand to the larger time frame, right? Where are we ultimately going? And this is where things get a little trickier because ultimately, number one, we have to acknowledge that the Bitcoin trade is very much following the tech trade. So if you look at when Microsoft topped out, when a lot of these other big cap tech, that's almost back in October when we saw Bitcoin top out. In addition, Bitcoin has this head and shoulders formation here. And so this head and shoulders formation in technical analysis is a bearish pattern, and it completes not until we get down to basically around $45,000 to $40,000, maybe even a little bit lower. And so, listen, I'm a big long-term bull on Bitcoin, but this period, because it's deleveraging in tech, it's probably still has downside over the next 3 to 6, 9 months.
Oh, absolutely. The chart seemed to be screaming that, Gareth.
Yeah.
But with regards to the relief rally, is it the technicals plus the extreme oversold condition, extreme fear is kind of the cyclical pattern that a relief rally is due?
Yeah, and that's amazing how that kind of plays into it. So the technicals, number one, you had this little bullish setup now, and then you also have this extreme kind of despair within crypto. And what usually happens is during a bear market, you get these extremes, and then you get people to get a little bit of hope where they buy in. I mean, that creates that move to the upside, and then that next flush comes. And it's almost like if you scan social media can be a great indicator. When you have people saying, "Oh, Bitcoin's done, Bitcoin's no longer going to be a thing," that's when you're usually going to get this reflex bounce in Bitcoin. But then once people calm down and they're like, "Oh, it's coming back," unfortunately, then the next wave of selling usually comes in. And that's something that we're watching for sure.
Is there any possibility of going beyond the 80, 85K, maybe touching the 90s for that relief rally?
It's always possible, right? And so the big thing that I always look at on the charts is I say, okay, so my first level is this zone 80 to 85,000. If we could break through that, then that's where we start talking about and saying, okay, well, your next level is not until honestly 90 to 95,000, right? And so right in these highs here, even almost to 100,000. But I think it's important for us to kind of keep this level head approach where we say, okay, let's see if we break 80 to 85 first. If we can, then let's start talking about our next target. Because I think it's tricky in the crypto markets and in the investing world where we start to fantasize about like, oh, well, if it does this and it crosses its T's and dots its I's, maybe it can get back to all-time highs versus letting the charts kind of guide us to what's that next level to go.
Oh, absolutely. And I know one of the things that have been floated out there is, okay, if we get the market structure bill passed, maybe the timing aligns with this relief rally. Maybe we go touch 90 or 100. But look, the probability of that it seems kind of low.
Yeah, but I think it's important to also recognize that if you're someone who's been in this space for a long time like you, we should be almost normal. These downside moves are not abnormal, right? Every 4 years we see a 70% drawdown, and then we go to new all-time highs. And I think again, as long as we keep that mentality, and as long as our long-term thesis for us that our bulls long-term holds, which is the fiat currency destruction and these other factors, then Bitcoin should be something, at least it is for me, that I hold in my long-term portfolio. Maybe not in the short term if I think it's, in the next couple months it's going to go lower. But at least in my long term, I'm just sitting pat and just being patient.
Oh, absolutely. I wonder if we can go back in history a bit to October, because Gareth, there's a lot of talk about the major liquidation event that took place on October 10th. But I see your trend line there, and it's essentially saying that's the top. So the technicals were showing it. So regardless of the narrative of what the catalyst was, Trump tweeting out about tariffs with China, then he backtracked, of course, but then the major liquidation cascading effect that took place on Binance and much more.
Yeah, and to be honest, that's one of the reasons why I love technicals so much. Because, back in October, we were hearing, calls by, we won't even name them, but like many people were saying 250,000 by year end. And I looked at the charts and I said to myself, is this something that I'm a believer in? And I said, listen, I mean, if it breaks this trend line, sure, then you start to say, okay, now it's broken, it's in uncharted territory. But this trend line was so telling to me. And this one goes back to the bull market high in 2017, the high here in 2021, and it literally was capping price 3 times on the weekly chart here that was not enabling it to break through. And so I think, again, this is where we go back to what we were just talking about is like, for me, I always say, let the charts tell me. So if we had broken this trend line, then it's like, okay, now 150, maybe 200. But until that happened, you have to kind of keep that level mind, which enables you to actually take some profits on your shorter term positions into this level versus saying, oh, I'm hearing 250,000, so let me just ride the boat all the way up to that level, and it didn't obviously happen.
Man, it's crazy how that 4-year cycle is playing out to a T, and
It
this trend
is.
line shows it.
It is amazing, man. And it's the power of one simple line that was able to guide people that were looking at this very, very logically, saying, okay, this might be a struggle point on Bitcoin, versus if you go on social media back in October, it was, oh, here we go. This is going to be, all that stuff you hear at tops. And you were just bringing this up before, is that, in the short term, we saw despair. Like when we saw that last flush to 60,000, it was like despair. And then what happens? Bitcoin bounces. And then at the highs, that also on social media, it can be a great, guide towards, wait a minute, people are a little too ridiculous here, calling for these, ridiculous near-term price targets. Maybe this is a top signal.
Yeah, well put. I'm curious, and this may be a hard one because we're really, really, going out on a limb here. If we were to bottom out in the 40s, right, and then we chop sideways, the typical bear market pattern, with this trend line in mind, what does the next peak potentially look like if it were to
And that's such a great thing to kind of keep in mind, because at least in terms of my shorter term, like, my midterm holdings, that would be a level where I would take some profits, right? And so what we can do here is we can actually extend this trend line out even further and just say, okay, so let's say in the next 2 years, we start to make that big move up, right? And so let's say we come down to 40, maybe a little lower, then we start to climb, and then we get the parabolic move. It tells us that somewhere out, let's say in 2028 to 2029, you're probably topping out between 170 and 180, give or take, somewhere in that vicinity, which again, as an asset goes, that would still be, especially from here. But if we get down to 40, you're still doing, almost essentially a 4X on your money there.
Oh, absolutely. So this is certainly one of the items to look at, this trend line. One, and I want to make sure I emphasize that there's other metrics, but
Of course,
this would be a solid one to look at because it's respecting it so far.
it is. And I think that's so important. And I think it's also important to remind people, kind of like you are doing, that any trend line can be broken at any point, but we want to keep our logic in check and say, okay, until it's broken, we respect it. Once it's broken, it's done. And you can just rip higher, a la what silver did recently and some of these other things. But until that happens, we should respect it because it guides us better than not.
Oh, absolutely. Can we take a look at some altcoins like Ethereum? Because I'm curious how they're faring. Typically the altcoins follow Bitcoin's move, but I'm curious if anything is deviating.
Yeah, and this is really interesting on Ethereum, right? So what we had on Ethereum here was this, and we can race these for the time being to just keep it as simple as possible. But we had this beautiful trend line going back to April lows of 2025, and we could see how every time we came down to it here, we bounced over and over again, and then when we broke it, look at how price came back up, but now respected it from the other side. So here it's support. Once support breaks, it's then resistance, and that's where you get your big rejection. Now, just like Bitcoin, in the near term, it looks to me like we're forming a little bit of a bullish consolidation zone here. You can see that green move up with inside bar action. So that would be near term bullish, maybe a relief rally to the low end of this consolidation here around 2,600. But then I would still be very, very cautious on ETH if we start to see the stock market roll over. Now, again, it's going to get really interesting in the next few months because we have a new Fed chair coming in. Is he going to be pushed to lower rates? Will he lower rates more than the market anticipates? Ultimately, how's the economy going at that point? So there's a lot of moving parts here, but I would say at least near term, look for a continued bounce up, maybe back to 2,600, and then maybe get a little bit more neutral. I might even get a little bearish at that point.
Gareth, as you were talking about that with the new Fed chair, I thought of 2019 because we saw a nice, I don't know if that's a relief rally, but it was certainly a strong, impulsive rally, but it didn't hit new all-time highs. That would be maybe the ideal scenario for us to see if the stars align, and that's a big if.
Right. I think you're right on that. I think that would be very interesting. And the other thing to keep in mind here too is where does at a certain point, and this is going on with some of these altcoins, right? I mean, we've seen the demolition of some of these really solid altcoins. I mean, even Solana's back in the 80s after being at 300 plus. I mean, at what point in the cycle do these bottom out? I mean, does ETH potentially get as low as the bear market of 2022, right, where it gets back to 895? And I'm not going to pretend to know what it goes down to, but it is just interesting how quickly. I mean, think about the comparison here. If we look at the S&P 500, I mean, here the S&P 500 is literally a few percent off all-time highs, and ETH is as far as it is, and Bitcoin's already down 50%. So it does make me nervous. Like, what's going on here where the liquidity is drying up and being sucked out of the crypto market so quickly, yet the stock market's still holding up? And then the question I guess we would have to ask ourselves is, if the stock market really collapses, does money maybe rotate? Like, at a certain point, do people get so in despair at the stock market that maybe Bitcoin starts to see some of that? Maybe it bottoms out before the stock market bottoms out. Just a couple thoughts.
No, those are great points because, Gareth, I've looked at charts where aligning gold, the S&P 500, and Bitcoin has deviated at a rapid pace. I mean, it's stopped, correlating, if you want to call it that, for a while now. It's kind of strange.
And I think that's so interesting because, people look at the S&P and they're like, well, Bitcoin's down 50%, S&P's so close to the highs. But what's interesting here, if we look at the Nasdaq topped out, which again is the tech sector really, in October. And that's when Bitcoin topped out. Now, the Nasdaq's only down, let's see what it's down right here from its all-time highs. It's only down about 6%. But it is interesting to see there's more correlation with the tech trade in the stock market than there is with the S&P.
So, Gareth, I'm looking at both your Nasdaq and S&P 500 charts. It doesn't look good. It looks bearish. Are we about to see a dump?
That's what it's looking like, unfortunately. So what we can see here is there was this beautiful, let me get rid of this. You can see there was this kind of this epic parallel channel, which has denoted the bull market high on the Nasdaq in 2021 to the bear market low of 2022. We then tagged it during the liberation tariff sell-off low in April of 2025. We then tagged the high. And what we see very clearly is that from the highs, we go to the lows. Here we almost got to the highs, and then Trump surprised us with those tariffs, but we went right back to the lows. And so for me, I'm nervous that eventually we're going to see a move all the way down on the Nasdaq to the lower band of the parallel. And the same thing goes for the S&P 500. We've broken this upsloping white trend line. You could see how price bounced off of it multiple times and then finally broke. Here's your classic retrace, and now it looks to me like we're about to dump out. So I am very bearish on the stock market. Hopefully, crypto's gotten a lot of its downside out of the way already, but again, we'll have to watch and see.
Yeah, this certainly doesn't look good. So I wonder if, Gareth, there's a talk of soft landing and hard landing. Are we going to about to hard land, and then the Fed's going to have to step in emergency print or whatever it is?
And I think that's weird. It's very interesting because, for the longest time, we've been seeing GDP numbers are fantastic. The jobs reports have been solid. And then we get these massive, reallocation of jobs last week, right? The yearly revision. And it was down like 800,000 jobs, meaning that they overtold us that there were 800,000 more jobs than there really were. Second year in a row, it's been that massive. And so I've been running on this thesis that the majority of the strength in the U.S. economy literally comes from the AI sector because there's so much CapEx spending, and that's driving GDP. But for people like you and me and everyone else that's looking around us, we're not seeing that economic boom, right? We're seeing this almost recessionary environment. And so what we're now seeing is the AI trade. People are starting to get a little skeptical. Like, wait a minute, all these companies are spending $200 billion each, ridiculous money. They can't all make money.
Right.
And the companies are starting to say, wait a minute, maybe we're spending too much here. And if that starts to pull back, it's just a real quick twist into a bigger recession here in the US. So I actually think that's going to happen. And then lastly, I think it's important to note this. The bond market is telling us that a recession is also likely starting. Look at the rollover in the 10-year yield here just in the last week. And this is coming on the back of jobless claims starting to spike, the jobs data being weaker, et cetera. The bond market is telling us something here about the economy.
But Gareth, what the hell happened with gold and silver? That was the surprise of this cycle. Crypto people were shocked, and maybe that took some of the liquidity from crypto.
It did. I think it did take some of it. I think that the bull market, at least in altcoins, probably would have been more resilient and powerful if it hadn't been for silver's run. Generally, I look at silver as being comparative to the altcoins. It was an incredible move. Even the velocity of it even surprised me to the upside of how high we got. But look at how quickly these type of things collapse, right? We went up to 120, and then literally we had one day where we dropped 30% on silver. And now silver is actually telling us that we might be headed for a recession as well, because it's starting to put in a bear flag. So you have the big drop here, and now we're trading in this range. And that ultimately is a pattern that usually leads to further downside. I actually think we're headed back to $50 to $54 on silver. So we'll be down well over 50% at that point.
Wow. Yeah, I mean, incredible parabolic run up, but what a dump. That red candle.
Yeah.
Oh my
And
goodness.
it shows you, by the way, I think what's important here is it shows us that there's two parts to a market. There's the normalcy where things grind higher, where it's realistic, and then you get in this parabolic blast off top where emotion takes over. And that's really what we saw once we broke out from this kind of high. Like all of this was very orderly, right? Kind of a grind higher. And then once we got here, this is the parabolic portion. And notice how when we dumped, the parabolic emotional part of the trade got wiped out 100%. And now we're kind of back to more fundamental-ish type stuff, which then breeds into the, if we see a recession, that makes sense of why we would go back, being an industrial metal partially, why we would go back to $50 to $54 per ounce.
And what about gold? Is something similar as well?
It is semi-similar, but gold is actually holding up better. It still does have a bearish pattern, but if you looked at silver, so let's just jump back to silver and just take a look. Notice we're much closer to the low end of the recent range. And if we go to gold here, gold is actually towards the higher end. And what that also tells us is that gold is still being viewed as a safe haven. So as the stock market's getting a little iffy, crypto's getting scarier and scarier, silver's dumped out, there's still money that's willing to go into gold. And it also makes sense, as we still know central banks are still buying gold actively. So there's more strength in gold. Like if you had to be long something, I guess gold's probably the best case, although I still think there will be one more flush out in gold. It just won't go as low as silver.
Oh, absolutely. And, Gareth, we saw the lead up to this, and with China buying tons of gold and a lot of central banks over the years. I remember seeing headlines 5-6 years ago, they're hoarding gold. And I guess this is the result of some of that.
It is. And it's also telling us that the global picture is shifting, right? It used to be, okay, we'll hold dollars, we'll hold treasuries. And then with all of these tariffs, a lot of countries are like, wait a minute, the US has so much control over us as a country because of the dollar reserve currency and the treasury market. And every country relies on us. And so what are they doing? They're starting to diversify away so that if something happens in the future where the US tries to push back on them again, like on these tariffs, on the trade war stuff, that they'll be more independent and be able to stand up to the US. So it's this whole kind of shift in global reserve currencies. It's not going to happen overnight. So I think that's important to note. It takes literally a decade or more, but it is slowly happening. Absolutely.
Okay, final item here, because I know the XRP army is going to give me crap for not asking you, but how's XRP looking?
Sure, let's take a look. So XRP, this is a tricky chart. So what I didn't like with XRP is when we broke below this level. You can see how many times we were just hammering on this sideways level. We broke down, and then look at what happened just yesterday. We rallied up into that zone right there, and it got rejected. And so if you're an XRP bull, you've got to get price back above this 178-ish area here, because that is now your zone of resistance. We broke below it. It now becomes resistance. We got to get back above 178. If you can, then you have a chance to break out of this downsloping trend line. But at least for me, I'm very kind of cautious on this. Just like a lot of the altcoins, I think they can bounce, but unless we get above key resistance levels, the charts are kind of capping their upside.
Yeah, well put. It looks like it's some rough waters ahead. Maybe, like you said, a relief rally, but then going to test some of those lows again, or going to lower lows, and then we have to wait out the bear market.
Yeah, I think that's it. And again, it's all about your time horizon, right? So again, if you're a long-term believer, then go with it. Again, obviously diversify. I think it's important for us all to have a little of everything so that one thing can't crush us individually. But time horizon is everything, right? Short-term, maybe trouble. Hopefully longer-term, better pastures.
Oh, absolutely. So Gareth, where can people learn about your services and your stuff that you got going on?
Sure. Just come over to check us out at verifiedinvesting.com. I always say it's where we have no BS and it's all charts. And the reasoning behind that is just like, social media bombards us, the mainstream media bombards us with narratives. charts are the only thing to me that have no bias, right? There's no narrative. Price is price. Whatever the chart's showing, it is what it is, right? And so we just focus on charts there, which gives us as clean a view as we can of what probability will be in play. And that's where it is, verifiedinvesting.com.
Awesome. Thank you so much, Gareth. Always appreciate your insights, and maybe we'll do another one pretty soon.
I'd like that, buddy. Take care.